What is good stuff, family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking out for the future and what the data is essentially suggesting for Tesla as I give you guys my price prediction for tomorrow. I'm also going to break down the latest earnings that just came out, what's going on with the markets, and how this may affect Tesla for the short-term future. Now, before I break anything down about all of this, and also a major update from Elon Musk himself, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Don't take any of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. And not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $2,000. And the best part is, any of these 12 free stocks could be a free Tesla share. It's a limited time offer. The offer ends in just 5 days. Check it out before they run out. With that out of the way, let's get on with the video. Tesla was up 5.29% for the day. Let's go. We had a pretty nice day. And looking at the overall trend, it did something very similar to what I ended up predicting. So in my video from yesterday, I mentioned that I saw the potential for the markets to continue pushing up. And looking at the comparison between Tesla and the overall market, I did believe this would help Tesla push to the upside. My target for Tesla was a nice gap fill all the way up to about this 221 to 222 range. We ended up going as high as 224, and we ended up closing pretty green. I also mentioned that if there was enough momentum, we could see a retest of 226. However, in this zone, I wasn't anticipating us to break out of it just yet because it is a historic chop zone for Tesla. So looking at the markets, though, there are other things to really look at that will affect Tesla and the market so far. Looking at the latest earnings that just came out, Alphabet, also known as Google, they actually missed on some important metrics. They did beat on a couple of things, but for the most part, they missed. If you look at their earnings per share, they had a miss on that. They missed on revenue. They did, I think, beat on Google Cloud revenue, but they also missed on advertising revenue for YouTube and also other things like that. So a big miss is not the best for the markets. The markets tend to negatively respond to things like this. However, looking at Microsoft, they did miss on a couple of things, but they did also beat when it comes to revenue and earnings per share. So overall, it was pretty decent. I'd say their earnings report was actually pretty good as well, but the markets have different interpretations of this. Earnings per share was a beat. They also beat on revenue. So congratulations to them. This is also good for the markets. And looking at some future earnings coming out tomorrow after the market closes, we have Meta, we have Ford, we also have other big companies. And then before the market opens, we have Boeing, we also have Hilton, and other big ones too. Now for Thursday, that's going to be a very big day for the markets. We have McDonald's, we have Shopify, we have Apple and Amazon and Intel. We have all of these giant tech companies. Thursday is going to be an even bigger day, and this will have a big effect on how the market ends up moving. So when it comes to Elon Musk, let me just get straight into what on earth this big update is. We don't have the full details about every little thing when it comes to this whole Twitter acquisition. However, one thing I do essentially see is the fact that Musk is very fixated on actually buying Twitter, and there's a lot of hype around the fact that many articles are saying that Musk apparently told bankers that he will buy Twitter by the end of Friday. So, very big update. If this is going to be the case, this will have some very big effects on Tesla. And starting off, I would say that most of what ends up happening and most of what is anticipated to happen has been priced in already. However, the market already has these big reactions. So some big news coming out that must close the deal could cause a kind of like negative reaction for Tesla for the short term. And also there is still a lot of sentiment around him potentially selling more of these Tesla shares. It is estimated he may sell like $5 to $10 billion worth of Tesla again to really close this deal. So that's the reason why I'm still very cautious when it comes to Tesla. However, there is still some momentum for the market to continue pushing up, which could help Tesla. Now, looking at the data, we can see right here, there's a very similar comparison between Tesla and SPY because the SPY is very correlated with the NASDAQ and the QQQ. What I'm seeing is the SPY was already starting to push up and Tesla's barely starting to follow. So Tesla was coming kind of behind because this whole like Twitter fiasco, the things going on in China from yesterday and beyond, all these things did cause Tesla to show some weakness relative to the market. But right here, look at the price price ratio. This is not the lowest sign of weakness for Tesla. It's been in worse states before compared to the overall market. And now we're starting to see some like somewhat of a bounce right here, which is a good sign because Tesla is showing more strength than before. And right here, there's still lots of buy ratings. Many big banks and analysts still believe Tesla is going to outperform the market going forward. I still stand by that for the long term, but for the short term, there could be some chop here and there with this whole Elon Musk Twitter fiasco, and not to mention the potential of him maybe selling shares soon. There's still not confirmation at the time of recording this, so we have to be very careful. Looking at the weekday seasonality, we can actually see that 48.74% of the time Tesla's actually green on Wednesdays. So we actually tend to see some chop, maybe some red here and there. And this is a little bit skewed after the last couple of weeks, but it is something worth noting that we do tend to be kind of choppy on these Wednesdays. Now, going all the way down, there was a big spike in the short interest on Tesla because the institutions were just shorting the living daylight out of it during that big drop. However, it is starting to come down a bit, and I do think that this is a good sign because the shorting is not as severe as before. That's a good sign for Tesla going forward because I do believe there is still potential for this thing to continue to see a nice break to the upside. However, before we get there, it does look like the market might chop a bit. We may even see a slight pullback before we see another big continuation. And I stand by this because of some historical data. So, firstly, let me actually first talk about SPY just quickly before I get into Tesla, because this is very important. On SPY, you will notice that, yes, we got a nice break to about 385, which is awesome. However, if I go back on the chart, if we go left over and over again, right here, this was around like mid September, the SPY came to this zone right here. It came all the way down to about this 382 level. It pushed up and back and forth between 382 and actually like 389. But we did see a lot of volume between 382 and 385. So this is historically a chop zone right here. So seeing us actually breaking above so many of these resistance levels in such a short period of time. I mean, look at how many we just broke as if they weren't even there, which is pretty crazy over the last couple of days. It isn't necessarily out of the question to see a slight pullback, some consolidation around here, some of the RSI metrics to really cool off. I think it's completely normal. So a slight pullback tomorrow, some chop here and there between like 382 to 385 is completely normal. And this will actually have an effect on the market. Now, for the QQQ, I wouldn't be surprised if this is a very similar state. If you look at the QQQ, we did see a big rejection off this 285 zone. This is very close to this chop zone right here around this 284, 285 level. So we could come down to about this like 280 range, just trade back and forth for maybe like a day or so before we continue from there. It's also going to be very dependent on earnings. And like I mentioned, Alphabet, aka Google, they missed on earnings. So, it wouldn't be surprising if we do see a lot of tech stocks, lots of tech ETFs responding this way. For the NASDAQ, very similar story. We do have a lot of chop around this 11,200 zone. So I wouldn't be surprised if we have some resistance that causes a slight pullback, some sideways action temporarily. But I'm not necessarily seeing us just crashing from here, guys. That's the big difference in this market. Now, what's good about the market is the fact that there is a lot of strength. What's bad about it, though, is the market is not a true reflection of the economy right now. The economy is going through many hardships. Inflation is still very high, and the market started to pump after the Wall Street Journal announced this big article that was talking about how the Fed may pivot very soon and this and that. And the truth is there's no clear indication of that actually happening in the short term. Jerome Powell hasn't actually spoken against that. So that's the reason why I don't see this pump being very sustainable. I do think the market's going to have a big reversal maybe as soon as next week. That's why you have to be very cautious when playing it. But for the short term, I'm talking about like tomorrow, the day after, the next couple of trading days, there is still potential for a little bit more upside and some chop from this point on. So what does this mean for Tesla? Well, looking back at the charts, okay, going back to like let me see if I can find it, mid to early October right here. So Tesla was having a lot of resistance at 226. This is historically a very strong resistance zone. Tesla was going back and forth between 220 and 226 for over a week at one point. Then what happened was, as we approached the second to third week of October, we ended up seeing lots of chop between 222 and like 220, and we actually ended up retesting 211 for quite a bit of time. So you guys could see this zone right here, this 226 to 222 zone tends to have lots of resistance for Tesla, and we could end up seeing some support at 220, which may not actually hold that strong for the time being. So for Tesla, I'm seeing us kind of like staying in this zone right here, seeing lots of chop right around here. Now, if we do get a bit of a like downside move, Tesla's gonna have to try to hold 220, and I can't guarantee that's gonna happen. So it's very possible for us to see a bit of a retracement from there. If we come down, it's very possible for Tesla to retest 220, come below that, then test 215. And if that doesn't hold, 211 is where we have pretty strong support. And I don't really see us crashing that hard, but it is a possibility that you need to be ready for. So please watch this zone very carefully. We're going to see lots of chop here, most likely for the short term. Now, if the market is just spontaneous and then we have a massive rally out of nowhere, that's also a possibility. But please note, historically, we have lots of chop here. Considering what happened to Alphabet, it seems very likely we're just going to continue to chop, and we could kind of like extend this to about like 215. So we could actually come down like this as well. So I'm anticipating Tesla's going to stay in this zone for tomorrow, but just consolidate and get ready for whatever is next to come. However, what is good about Tesla is something right here. So if the market has more momentum and the market starts pushing up, and let's just assume that Elon Musk does not sell shares this week or maybe for the next couple of days, it is possible for Tesla to get a big break and actually retest 230. And if we get a break above this, maybe like going into next week before FOMC, it is possible, but a little bit unlikely, but once again, very possible for Tesla to actually fill the gap at about 237. But we need to break 226 first. And once again, we have very major resistance right there. Now, it's also important to note that it's also possible for Elon Musk to sell Tesla shares. He could sell them as early as tomorrow, the day after. If the announcement comes out, Tesla's most likely going to respond very negatively to that, because this leads to a big domino effect that I mentioned yesterday, where lots of retail investors are not going to be happy about this. More sellers come in, and I wouldn't be surprised if we do see a big spike in this short interest if Elon Musk does end up selling tomorrow or very soon. So what's going to happen is, if Musk sells, we are likely going to drop to 215. That's not going to hold us. Then 211. And if that doesn't hold us, 205, 202, then 200. We could come all the way back down to this zone right here. Him selling will cause the share price to drop a bit, but what's going to be bigger would be the reaction from institutions, from retail investors, and things like that. And remember, a couple of days ago, when Tesla came down pretty hard, 200 did not hold us. We actually touched 198, which is actually a sign of weakness, that if we do come back to this chop zone, we could end up coming down even lower than 200 in the future if Musk does sell. So please be ready for that. It's a possibility, but I'm not necessarily seeing evidence or any articles about him selling just yet, which is why I'm still going to see something like this. For tomorrow, I wouldn't be surprised if we kind of gap down like this. So I'm not going to talk about Musk selling. So please note, if he does sell, we could come down pretty hard. But let's just assume he doesn't sell. What's likely going to happen is we might gap down like this, for example. I want to see us hold 215. It really depends on if the market gets a nice bounce or not and how we hold. I'm anticipating us to kind of like hold this range for some time. I mean, if we do end up coming down a little bit hard at one point, we could kind of test like 211. I mean, that's a little bit unlikely, but if that's the case, I'm hoping for a nice bounce off that, coming back to this zone right here, and maybe we try to fill the gap that was formed, and we end up pushing up back to about that 220 range. So I'm hoping for like a move like this, and I think I drew this on too big of a time frame. Just to assume this is all just for tomorrow, guys. I'm sorry about that. This is all just for tomorrow, not for like all of November, just for tomorrow. So for tomorrow, I want to see this thing hold these zones pretty well, specifically 215 and 211. I want to see us hold up. I want to see some consolidation, completely fine, cooling off our RSIs and getting ready for the next leg up. Hopefully, we see a big continuation of the big push for Thursday. So be ready, guys. I'm hoping that Tesla fills a potential gap it forms if it does end up gapping down into open. It could even happen as soon as tomorrow, because the market is sometimes very, very unpredictable. But for the time being, I'm seeing some chop. There is some more potential to push up later on, but until then, I'm still getting ready for a potential pullback and some sideways action. So be ready, guys. Do what you have to do and watch the news very carefully, because if Musk has some big announcement, such as him selling or him buying Twitter, Tesla may have a negative response to these things. So be very cautious, remain calm, cool, and collected, and I will most definitely see you guys in the next video. Tesla to the moon, because the long-term future is still incredibly bright, and peace out.